May I welcome Marc Odinius. He is the CEO of Dataforce. They have all the statistics, all the details about the current fleet market in hand, and he will share with us some insights. And after that, I have the opportunity to ask him some relevant questions related to the EV marketplace.
Thank you, Steven. Great pleasure to be on Global Fleet again to present some figures on the EV market outlook today. And I will show, as always, quite a lot of figures, but just listen in on what I have to say to the figures. They should just support what I'm saying. So, and if we're ready, then I would take it away. EV market outlook. I will just very quickly go onto the global market development, just to see how that relates to the EV market development, then go to the global powertrain development, and then we will just deep dive, just very, very short, on the European diversity to see, do we have specifics there which we have to take note of? And then maybe there's some time for questions. Okay, so let's start. So here, the 4 agglomerations I'm looking at: Australia, USA, China, and Europe. And the dotted line is 2019. Dotted line means that year where we didn't have COVID, so we can just relate how the markets are performing today. The gray line is 2020, so our first COVID year, and the dark blue line is this year, so 2021. So then we can relate. And if you see, all markets didn't do so badly, especially Australia, the US, and China. If you look at the dark blue line, they actually managed this year to, in parts, surpass even the pre-COVID levels. So at least until the half year. Except for Europe. Europe had a struggle. They also regained and, of course, performed much better than 2020. But they never managed to go back up to the 2019 level. And furthermore, now, since the half year hits us, also the chip crisis sets in. And we can see all markets now dipping below the 2020 figures even. So even going lower than we were in the COVID crisis. Australia, US, and China are still well going to surpass the levels of 2020. Europe might have a struggle. So Europe is really the hardest hit country agglomeration, which might have trouble to even hold the 2020 figures now in the second COVID year. So that's what we see. Quite good regain, but now we are dipping down below the levels we saw last year. Now look at global powertrain development. What you see here is the absolute numbers for Australia, US, China, and Europe in terms of alternative powertrain. Dark blue hybrid, light blue plug-in hybrid, and electric vehicles green. And you can see, just not even looking at the figures, they're all going up. So we have absolute figures going up. And if you look at the last column, it's October 21, August 21, September 21. That means even that the year has not closed, we are already in 2021 surpassing by far in most countries here, or in most agglomerations, the levels of the previous year, even though those levels were high too. So you see different scales here: 70,000 with Australia, 600,000 with the US, 1.2 million with Europe, and 1.6 million with China. So that's not usually how you do it in statistics. So let's make them all equal to see how much alternative powertrain is going in the world. So go back, go forward. So that's the same graphs, just put on the same scale as China has the highest. We go with 1.6 million. And there you can see Australia has near nothing. It's 65,000 vehicles, amounts to about 7% of the market, of the new car registration market. In the US, we have 1 million, which amounts to 9%. So considerably more, especially through the COVID crisis, we see the levels rising. Especially this year, we saw a lot more hybrids in the US market. Also, slowly EVs are picking up, but it's still very low levels. China, it's different. China, formerly the biggest market for alternative powertrain with 2.2 million vehicles, amounts already to 15% of the market. And you see that they are really pushing a lot for the full EVs, so for the BEVs. The hybrids are actually even going down a little bit, and now slowly also the plug-in hybrids are picking up. But they really have strict policies on the number of alternative powertrain vehicles they want in the market, and the ICE engines being penalized. So therefore, you see that heavy on EVs. In Europe, it's different. It's quite diverse. So we have EVs going, we have plug-in hybrids going, and hybrids going. But already the EVs are pretty high. And if we add up all those figures for Europe, Europe is in the lead with 2.5 million vehicles now. And look at the sheer amount which that is of the market. We're talking about a quarter of the market already being alternative powertrain. And that's for the whole year now of 2021. If we now dive deeper a little bit into Europe, we see that it's already going further now if we look at the last months or the last quarters. Okay, so let's dip into Europe. Now, this is our Road to Zero dashboard, which we do for all European countries. So it enables us to really dive deep into countries. At the moment, therefore, you see at the top this green squares, one on country. So you can see and follow what country is here. At the moment, none. That means all European countries are selected. And we see on the part of the channel share, we see that we are selected the private market. So what I wanted to show you here is that in the private market in Europe, already full battery electric vehicles, BEVs, are the second powertrain. Next to gasoline engines, then we have EVs, and then we have diesel and the rest. So that's, I think, quite noteworthy that we're already on number 2 in the private market. Now, let's move to the fleet market. Fleet market looks totally different. Going back private, this is fleet. The fleet market has a more diverse look because there diesel is more prominent than in the private market. But you can see here 2 things. You can see here that we have about a share, equal share of plug-in hybrids and EVs, which is different in the private market. And plug-in hybrids are going strong, especially through the taxation benefits. Okay, now another thing is going to Germany. So that was Europe fleet. Now turning to Germany, you see that Germany has changed completely because now we've gone from a diesel country in fleets to a gasoline country. At least fleets are now same share in gasoline than for the diesel engines. And if you now look below, we have a high share of plug-in hybrids, but already the full EVs have picked up over last months to have an equal share now. So everybody is scared about the plug-in hybrids a little bit to see, oh, what are we doing in future with the plug-in hybrids? And you can already see that the EV volumes in Germany are picking up so much that they now level the plug-in hybrids. Overall, if you add up those 2 things in Germany, which is absolutely astounding, and it surprised me too, and I don't have so many surprises in the figures for me. For the first time, if you add just plug-in hybrids and EVs, we are even higher than diesel, higher than gasoline. So alternative powertrain at the moment, if you look at the pie chart at the top, we have some CNG vehicles in there. It's really, really high because it's 35%. And that's higher than 32 in diesel and 31 in petrol, which is absolutely amazing. Now, 2 more things before I come to a close. So that was Germany. Look at the Netherlands. I want to show you Netherlands because you see how taxation impacts how we adopt EVs. In the end of 2019, there was a taxation change in the fleet market. So penalizing previously supported vehicles. So everybody still wanted to get the subsidy, and we all registered vehicles like mad in December. They did it again a year later, end of 2020, and you see it again that it spikes up. That means you can do quite a lot with subsidies. You have to also think about what it does in the aftermath of this subsidy, but you can see how you can steer markets by introducing benefits or taking them away. That's the Netherlands. And now just a final look into Europe for you guys. to look into the fleet market of Norway. And here, look at the pie chart. 90% is already alternative powertrain. In the fleet market, they also rely quite a lot on plug-in hybrids, but still the EVs are really, really high with over 40%. Now in October already going to levels of 50%. So that's really quite a lot. Okay, that's the EV market outlook. EV is growing against the trend. Core markets are Europe and China. Incentive, taxation benefits, model variety really drive up the numbers. In Europe, fleets are driving the change. That's not the case in the other markets. And in Germany, for the first time, alternative powertrain outnumber even diesel and petrol engines. Thanks, guys. So maybe, Stephen, you can just take it back now and go.
Thank you. Thank you very much, Marc. Thank you. Thank you for showing the EV market state. Very interesting figures. First question that I have is related to the final slides that you showed, and that was on the Netherlands and on Norway. We saw that within Europe and probably also even on a global level, they are really front runners when it comes to the uptake of alternative powertrains. Now, it's also known that they have quite a good developed charging infrastructure in their country. Do you fear that the uptake of EVs, as you have shown it for Europe, in the US, in China, and probably in the future also in Australia, could be negatively impacted by the lack of investment in charging infrastructure?
Yes, for sure. So I think that's when we look forward, and we can look forward into Europe, at least for the next 5 years in our forecasting. And the limiting factor at the moment that we don't go to levels of 50% even is the charging infrastructure, because we really have not always a private garage or anything. Not everybody can charge at home or even in the workplace. Now with home offices going on quite a lot, home charging even takes more precedence now, and that's not really working well. I think it's not so sexy to go for infrastructure. It's more going for the cars, and I think there we definitely need to do more. And you can see if the charging infrastructure is high on the agenda, then it will work better. And we might see levels of 10-15% more uptake if we get it right. And there, for sure, we think 2025, 26, we will see levels dying down due to that lacking infrastructure.
Could that also be linked to the decreasing subsidies? Perhaps we can imagine probably that in the future that some of the countries, some of the governments that are now heavily subsidizing the uptake of electric vehicles can't do that anymore in a couple of years. So could that also be somehow an obstacle?
I think it's less so the case than the charging infrastructure. I think as soon as everybody, I would say we have the majority of vehicles either being plug-ins or full battery electric vehicles, then the mass production is easier. Even the used cars are starting to function. The TCOs will get better. So from my point of view, yes, of course, we will have dips. For example, for the plug-in hybrids in 2025 in Germany, you will see levels just going down very sharply as soon as you don't incentivize that anymore. But I think then the offer on vehicles overall and the prices, in my view, will come down so that it will impact that a little bit, but not as much as the infrastructure.
Okay. What was also interesting, if I understood correctly, is that it seems that there is not so much a heavy impact of the current chip shortage on, let's say, the uptake of EVs and alternative powertrain vehicles compared to the internal combustion engine vehicles. Is that correct?
That's correct. That's perfectly correct. That's due to the fact that new vehicles with new equipment seem to be easier to build than to go for the ICE engines, and people don't really. don't like to actually go for that uptake anymore. So that's
Okay.
really a big issue.
Okay, we have quite some international and global fleet managers in the room working for multinational companies. You, of course, know that those multinational companies, they have clear carbon neutral targets in their policies and in their corporate goals. How realistic is it to ask for fleet electrification by, for example, 2025, 2030 on a global level?
I think that's still unrealistic. I think if you as a CEO want to drive it, I think you can do it in quite developed agglomerations. You will be able to do it. But I think if you look at South America and you need to put your vehicles on the road, you might use other means to be totally carbon neutral. I think it's a stretch, also depending what your vehicles are used for. So if you have a lot of benefit in kind vehicles, it might work. If you actually have a workforce which actually uses the cars for service and maintenance and have to drive long distances, then I think it will be difficult, at least to 2025.
Okay. We talked already about the infrastructure. We talked about the chip shortage. What needs to be done, and what can we expect from the supply chain, from the car manufacturers, from the other tier suppliers in making the EV uptake even more global and more seamless than it is today?
I think we see that already, that we have more investments in battery plants around the globe, and that it's not just being in the Asian markets, so that they come to Europe and try to be more self-sustaining, to control the supply chain themselves a bit more. So I think that's a learning now, which everybody has to say, okay, we can't be so dependent anymore. How quick that's going to be set up, that might take years still, but I think in that sense it works. But I think also that the problems we now still face with range anxiety, which is still there with a few people, and also the time we take for charging, especially, that we need to work on that in order to lessen the impact of infrastructure. Because if you can fast charge, if you have a long range in your car, you're not so dependent on that. And I think there the manufacturer and the suppliers can actually do a great deal to actually make it easier for us all to make the choice.
Okay. Some studies point out that the production of BEVs, battery electric vehicles, is not as green as many customers think. To produce the vehicles, you need resources, there is energy that is needed, and so on. Aren't we fooling ourselves thinking EV is the number one sustainability solution when it comes to transportation?
Difficult question, because the total cost also to actually build the batteries and dispose of the batteries in the end, I think hardly anybody really puts out proper figures. So to be honest, I'm not perfectly able to say yes or no. What I think is that we are not looking at that enough. We should be looking at that much more. And I also think that we are now fully committed to EV already in Europe, at least. And now we see people going for also for hydrogen initiatives and everything. And I think it is the right push to actually go for carbon neutral transportation, but it won't stay at that. So I think we will see other developments happening in this pull which EVs are producing, to see other things coming up and re-evaluating the problems we actually generate now by using so many materials to build those batteries.
But if I understand you, then you say that international corporate fleet managers, global fleet managers, they can and should already start today with electrifying their fleet, not only in one country, not only in one region, but they can already look at multiple regions across the globe.
Yes, for sure. I think that's the dedication of the fleet manager and the company as such. If you want to do it, I think the offering is getting better and better, and also the service offering around it is growing. If you see how many mobility services we now get, I think we see that there's a whole cosmos growing up, and I think we need those drivers of those fleet managers who really take the helm and say, "I'm going to go for it if I can afford it, of course," and then we see others following if it works.
Okay. Thank you very much, Marc Odinius, CEO of Dataforce. To the audience, if you would like to know more about the EV market, details, statistics, studies, market comparisons, then please go check out also the website of Dataforce, dataforce.de. Marc, thank you very much.